using these lows right here. So this is always from like for other buyers to enter in. So me, I always wait for days. So now we see this huge push down, like from around here. We had this huge push, this level. So we have our tap and close back inside. The momentum is in. Scale down to the 1 hour. So when you look at the 1 hour, most people want to take a conservative entry, but me always want to take the aggressive entry whenever there is an inducement formed near the order block, like the one I've formed. In the 1 hour, that's where we enter from. This is our entry. Our stop loss below the low. Mark the next high. As long as it isn't 1-3, that's enough for me. We're taking 1:3. Boom. There we are. In the position. And there's always one thing that I always emphasize. When do we go break even? I mark the low where I've entered, where I'm taking the TP from. As long as price closes above this 50%, I'm good to go. Closes above this 15%, I'm good to go. Go break even, take TP, break even, then we wait for what the market will do. So that's basically what I look at. I look at the higher time frame sentiment. After looking at the higher time sentiment, that's when I do that. So basically that's how we do it, and market always reverses whenever it hits 1:3 for the system that I'm using. It's all about understanding the right order block where to enter from. So when we go back on the daily, you see we marked this order block, fair value gap here, manipulation taken out. Now we have tapped from close back inside, and we are heading back up. This is so you can see it very well. You can see there we have a very close back inside right here. Around here, you see that top right here, close back inside, order block looking clean. So we are hitting back up. We target 1:3. We are out of the markets. That's what I basically look at. Just make sure that what you trade is simple. So you have 3 things: higher time frame order flow, or is the market trending down or up? When it is trending up or down, look for the nearest order blocks. Our order block should have caused a break of structure, imbalance in the market. We need to see these huge candles, like huge volume in the market. By seeing the body of the candle, we wait for manipulation, for aggressive entry. From the data I've collected, from the aggressive entry, we have to see manipulation from around the fair value gap, a huge drop down, let's say like right here. In the real market conditions, we have this huge drop down here. There we know that yes, smart money is sweeping this inducement to act as liquidity. Then we head back up, close and low inside, then we enter. When it drops drastically, we have to now be thinking of conservative entry, where we have to drop down like to minute time frame. We see the structure. Now I want you to see the market will have left you. We had a tap right here. We had a tap right there. And now market is just moving like crazy. Let me zoom out a little bit. So you can see we had that tap. So if you waited for conservative entries, have been low here. This go right here. These are just inducements. We had this. This is break of structure to the downside. Then we have a change of character right here. this shows that market is now bullish. This is like a sort of market shift to the upside. So this is what end of character. The market has changed sentiment. So for conservative traders, they would wait till market breaks this high, comes all the way down here. This is the first variable gap. We form this inducement, we sweep the inducement again, from another inducement, sweep another, and we get a cross candle inside, then we enter the position targeting here. So this is basically where we enter from. So 15-minute time. I would have entered immediately right here. Let's check our long tool. 15-minute time for this. I would have bought a sniper entry right here. So we reduce our tool right here. Let's reduce our tool. Boom. If you can hit the 1:3. Okay. A bit going up. So let's put my stop loss below the low. Let's check 1:3. 1:3 is near here, so you check. So 1:3 is almost near, as you can see. There, looking clean. Look at that cleanliness. So we had a break of structure right here, change of character. It means our market sentiment now is up. This is where we enter from after this candle close. 1:3. So how would we enter for the second time? For the people who have missed the tab, this is how we would enter. So I will mark my fair value gap. This is where I expect a market to form those inducements. This is what I would anticipate after breaking this high. I expect the pullback phase here to form a little bit of manipulation. Take out the manipulation, we form another manipulation, a little bit of switch out on the lower time frame. We sweep this, get a close candle inside, then we get back up right here till we reach this area. So when we mark this on the block right here for our entry, conservative entry, the 15-minute time frame, where we end up get our long tool. Want to see if you can get 1:3. This, yes, get 1:3. How we going to determine our stop loss? Down here. So basically down here. 1:3. That's where we get our position, but without shifting at this area. If you want to get a more entry, you can drop the 5-minute time frame. See the development after the tab. We had this up right here. We have this high break of structure here. Wait for a tracement, but we have missed the entry. That's it. So that's why I always like to take the aggressive entry whenever we are aggressive. So in the 4 hours is looking clean. Taken out the inducement. Now the 15-minute time frame TP is already getting hit. We are just seconds away. So TP is hit right here. So after market hitting our TP, we will bring out our Fibonacci from this low. Let's bring out the Fib tool. Also, let's delete all this unnecessary, all this. Just to, you need to know what you expect price to do for yourself. So let's slide back up and you see how I'm getting this. The TP is hit. So I was like, when do I go break even? This is the risk management plan that I always have for this. We mark our Fib till our TP where it's supposed to be. When price closes above the 15%, break even, it means we are risk free on this trade. Break even, you are not worrying about market reversing, you're just hitting break even right there with the Fib with the market to reverse. Why? have our supply order block here. So we are in the premium zone right here. So markets likely to react to this zone, the orders. Then we come down here. From here, after this tap this, then we head back up for the conservative traders. Then we break this higher. So GUs, let me set up some GU. So that was the setup for GU. Yeah, so this can be